Welcome to Short View Trading. It's great to be back with you. It's Monday 17th of April around 9:30 a.m. London time, and as always we want to dig into what should traders be thinking about on a 1 to 2 week basis. If you want to trade equity index futures, specifically S&P 500 but other related equity index futures as well, what should you be thinking about? What factors should you be looking at that will drive these markets over the next week or two? That's what we're going to dig into in this video. But what a fascinating market, so much going on, so many key things happening. US earnings, macro data, what are the banks up to? But also one of the things that I think is really interesting is if you look across a range of global stock markets, there's a bunch of countries where they're breaking out to new highs. Just look at the Shanghai Composite, the Chinese market, the main Chinese equity index, up at around a 9-10 month high. It's higher since June, July last year, closing at a new high, multi-month high, literally today. Of course, what's driving that is the China reopening story, more policy coming through, the economy reopening fully post its COVID lockdowns. And with that, you see some strength in Hong Kong and some of the other Asian equity markets as well. But it's not just China and Asia, it's also in Europe. Look at the French CAC at a record all-time high, multi-year, never been higher level that it's been reaching at the back end of last week, driven higher primarily by its luxury goods stocks, LVMH, L'Oreal, Hermes and the likes of these kind of stocks, as well as one or two others like ST Micro. Now what's driving that, of course, is partly the China story. China reopening, great for luxury brands which sell a ton of stuff over in the Chinese economy. So French CAC hitting new record highs, the German DAX pushing up, as you can see on the chart in front of you. And equally, if you look at Europe on a broader basis, a broader equity index, it looks like it's trying to push out of its recent April trading range, trying to push to new highs. So there's a whole bunch of countries across the globe pushing out to new record highs, whether it's multi-week, multi-month or whatever. And this matters because we operate in a global economy and a global stock market where risk appetite washes around the world. And what happened in Asia, what happens in Asia, often happens in Europe, often happens in the States or the other way around. But equally, if you look at the US market today, it's still pretty range bound. The S&P 500 is just trying to break out of its April range. It was strong in the second half of March as it bounced from its oversold levels during the depths of the banking crisis. But in April, it's been pretty sideways range-bound price action, as you can see in the chart that we're putting up in front of you now. And it's just trying to push out, but so far having little success in pushing above that range. Equally, if you look at tech, a very big component part of the US stock market, much bigger in the US than other parts of the world. Tech, of course, had a good run over the course of much of this year, but now looks like it's topping out. Look at the NASDAQ 100. We had a DeMark 13 count earlier in April. Since then, it's struggled to move up and almost trended a little bit down. Philly stocks, very similar. And also, if you look at something like a NASDAQ sentiment index, as we show you in this chart up in front of you now, again, it's back on sell. So tech is struggling and the S&P is therefore lagging as other markets are breaking out. And that leaves us with the question of, will the S&P roll over or is it going to follow the rest of the pack and break to the upside? And one of the great ways of thinking about that when you're a 1 to 2 week swing trader is to look at short-term market timing models. And we got a bunch of them. So the short-term risk appetite models, which really measure fear and greed on that 1 to 2 week time frame, are pretty much back on sell, as you can see from the short-term risk appetite scoring system we're putting up in front of you now. Equally, the market's been pretty overbought in the last week or two. And added to that, if you look at volatility, it's very low. And the amount of downside protection in portfolios, the amount of puts in portfolios, also very low, as you can see in the put to call ratio chart that we're putting up in front of you now. So from the perspective of short-term models, it's looking pretty dicey and the odds aren't on the side of the S&P breaking out to the upside. Quite the reverse. It looks like there may well be a rolling over starting to play out. But to see how we're playing this in detail and for updates each and every day, please do see our daily rag, we also known as Rag Trader, available to subscribers via the website, or for a free trial, simply stick in your name and email address, no credit card details required, and we'll give you a free trial of the daily rag for a bunch of trading sessions. And in that daily rag, every day we update our views on the market. We write about our recommendation, we write about our models, and we update all of that each and every morning, publishing around 9 a.m. London time every trading session of the year. So what are we watching today and this week? What kind of key factors might be interesting in terms of news flow that could influence market prices? Well, there's a whole bunch of stuff. Firstly, it's a continuation of the US earnings season. It really got going in earnest on Friday with the major banks. And then over the course of this week, we've got a whole ton of S&P 500 and other important companies reporting, including Tesla, Goldman Sachs, Bank of America, Procter & Gamble, American Express, amongst many others. So lots of companies to keep the focus of the market. On top of that, there's a US housing data theme over the course of this week, a various bunch of housing data points, NAHB, starts and permits, and existing home sales that'll add to the debate about where US housing's going to. On top of that, it's what I call China Data Dump Week. So tons of Chinese data out on Tuesday, including fixed asset investment, industrial production, retail sales and so on, and a little bit more later on in the week as well. Added to that, keep going, it's a busy week. There's a lot of UK data, big focus for the UK, with unemployment data, with inflation, with retail sales, consumer confidence and so on. And then on top of that, on Friday, we've got flash PMIs from across the globe, first take really on global economic activity in the first few weeks of April. So that's it from us. That's your morning market hit for Monday, 17th of April. Thank you for listening. If you want to hear more from us on key events of the week or market positioning documents or the similar, please do head to our website, longvieweconomics.com. Sign up to the intro. It's free. You get a lot of information every week on a free basis that helps you get into these markets, including the key events that are coming up. Other than that, please do subscribe to these videos. Simply click on the subscribe button on YouTube, like and share on social media, or follow us on Facebook, LinkedIn, and or Twitter. Thank you for listening. Stay safe, trade well.